Good afternoon, everybody, and welcome Nancy and Dan. Nancy Pfund, one of the all-time great names of a venture capitalist, last name Pfund.
Born to the job, I always say.
Yeah, congratulations on that. And Dan Shugar, CEO of Next Tracker, which we're going to learn about. Nancy, I'd like to let everybody know is, and you'll correct me if I don't have my facts straight, is currently on the board of Solar City and formerly on the board of Tesla.
Yeah, I'm on the board of Solar City and was a board observer for several years at Tesla.
So you've sat in many board meetings with Elon Musk.
Absolutely, my pleasure.
Maybe we'll get into that later, or save that for another panel, or for the next book.
Exactly.
Okay, so Nancy, take a moment and a brief moment and tell everybody specifically about your current fund, how big it is, what its focus is, and what it's like to be a venture capitalist in a very specific field.
Sure. Well, first of all, thanks for inviting me and for having Dan, one of my favorite CEOs as well. So DBL stands for Double Bottom Line. We invest for both financial return, as anyone does in our business, but we also invest for social, economic, and environmental return. And we've been doing this now for over 10 years, started at JP Morgan and then spun out in 2008 and raised our last fund. We closed that this June at $400 million. So we are here to stay. The field impact investing, as you all know, is getting extremely popular. The notion that there's no sacrifice between driving financial return and improving the world, making the world a better place.
And for clean tech, if we want to use that expression, and for impact investing, $400 million is a very large fund, yes?
It is, and I think we're actually the largest impact venture firm. That fund is the largest one out there. So it really does show that the field is growing, and we've had the good fortune to work with folks like Dan and Elon and Lyndon and a whole slew of others to really put success on the map for this field.
And I want to note for everybody the way Nancy referred to Dan as one of my CEOs, because and this is I think quite a nice, affectionate way of putting it, and not uncommon in the world of venture capital, in that when a venture capitalist invests with an entrepreneur and succeeds, it's highly likely they're going to do it a second time. So Dan, I'd like you to, again, briefly tell everybody about both of the companies that Nancy invested in, that you founded and ran, correct?
Founded, ran the second one, Next Tracker. Joined with an entrepreneur very early. We were literally in a one-car garage with the first one, Powerlight, back in '96. And actually, my solar career started in 1988 when I was an electrical engineer for PG&E. And so I've been a solar warrior for quite a long time, going on 3 decades. So the first company, Powerlight, the industry was very nascent. The annual manufacturing deliveries installations were about 30 megawatts a year. Last year, there were 50,000 plus megawatts. So it's grown by, over 1,000 times, 1,500 times in my career. So the first company we built, we were very focused on being #1 in the world at large-scale solar. And I do believe we achieved that. #1 meaning we built the best systems, had the largest market share.
Large-scale solar means selling to utilities, to big customers?
Commercial, industrial utility, not residential, although later we did a product for home builders. So we built that company. We sustained about an 80 to 90% annually compounded growth rate for 8 or 9 years. We were going to go public, and we had an S1. And then in 2006, we got a call from SunPower. And we ended up merging with them at the beginning of 2007. The deal consideration was $332 million. I had the privilege of serving as president of SunPower. In 2008, we did 2/3 of the revenue of the whole corporation. And so that was...
When you say we, you mean the products that you brought with you into the...
Correct, yeah. So it was kind of a nice continuum. We were kind of like Dell, and they were like Intel. They made solar cells. We both made panels, but we made systems, roofing systems, tracking systems. We developed dozens and dozens of patents. We manufactured those, and we actually delivered those to customers. So that company was a systems company, and we continued the growth there. I stayed there over 2 years. I was going to go back, but I ended up taking a sabbatical and then getting excited about some new technologies. So the company I'm with now, Next Tracker, so the first company Nancy invested in.
And he's fast, by the way. I think we held that only 18 months, and we're holding Nextracker less than 2 years.
You hold the first investment for 18 months.
Yeah.
Uh-huh.
So, which is IRR is driven by the time you hold an investment. So that's one of the many reasons we love Dan.
I appreciate that.
Because you make money for her quickly, is what she's saying.
Right.
Yeah,
you
making
can do
money
it slowly or quickly. We'll take quickly, please.
Exactly. I mean, really, that is a great outcome, but that's a byproduct of mainstreaming solar. And I mean that sincerely. Our team, we have virtually no turnover in all three of these companies.
Okay, but excuse me, very quickly, you started another company. It wasn't called Nextracker, it was called...
Correct. Well, I joined a company called Solaria, actually between Powerlight, SunPower, and Nextracker, developing a new panel technology. And what happened was that company, the way the optics on the panel worked, the panels had to follow the sun over the course of the day. And we tried to find other products in the industry that did what we had done previously, make these mechanisms. We thought there was a great opportunity to advance the state of that industry. And so we created this company, Nextracker, less than 2 years ago. We spun it out of a company called Solaria, which Nancy had also invested in. So we've been together in 3 companies now. And then we pursued a very rapid rise in revenue. In the first year we did, which was 2013, about $1 million. Last year we did roughly 45. This year, we're tracking 4 to 5 times that. And so the way we were able to do that is basically we developed we focused on the key category, which was solar's just transitioned from diffuse markets to markets where economics stand on their own, sunny markets in the Western US, China, South America. And the killer app in those markets for ground-mounted systems are trackers that help. With a tracker, you get 25 to 35% more power than you do by not tracking. So we really focused on that, hyper-focused, using the decades of experience of our team, and we developed a category-defining product and have basically had this incredible rise in revenue, tremendous customer loyalty. So we have the largest solar trackers on the ground in Australia, in South America, in Chile, in Central America, in Honduras, and now in North America. And so
you've had such good success. Then why are you then selling the company?
I'm so excited about this merger because what we had absolutely achieved lead market share and tremendous customer loyalty and great technology in these core markets. But the next step for us in our mission of mainstreaming energy was to really get into markets like India and Brazil and China. This is where this technology needs to go now as the next step. These are the fastest growing solar markets. Do I want to use my limited and precious management attention units figuring out how to create a back office in India, Brazil, and China, how to get my money out of the country doing JVs, blah, blah, blah? No. So what we did was we were actually approached by Flex, which is a 200,000 person company, a $26 billion company with 30 countries and 100 manufacturing facilities. So they're set up, they've got over 5,000 people in each of the countries I mentioned. So basically, they can deal with the back office. We can bring our products in, really focus on products and services. So the reason I'm really excited about this is that, to me, now that solar is a $100 billion industry, I think this could be the start of a true manufacturing model for solar. Let me take a moment and just quickly explain. Our last company, Powerlight, was a vertical integration model. By all other metrics,
you made everything.
We invented, we manufactured, we actually even physically installed. We were responsible as a contractor for that at that company. It needed to be done then because the cost structure of solar was almost an order of magnitude higher than today. So we needed that margin compression. It worked. We killed it. Okay. Now that the industry's grown, at this scale, you can't be best in the world in everything. So the analogy I like to use is before Henry Ford came into the picture, people were like hand-making cars, and they were expensive and unreliable. He came in and he developed standardized workflow and started knocking these cars out, but he owned like railroads and coal mines and forests and all the stuff for pallets. And and later, where car companies are today is they want to focus on final product design, customers, financing, service, things like that. They might do final assembly. So I think this could be, this merger we just did with a global manufacturer, the beginning of that model of where we are today.
Can I just step in
Please.
here? I think what's important for folks to understand who are interested in investing in this sector is that the progression from Powerlight to Nextracker is really showing us that there is a role for old-fashioned American innovation that relies on not just business model innovation or financial innovation. Believe me, we've made money in that, we love that, but a lot of folks think that's all there is, and that is so emphatically not the case, because you're seeing real live examples with Dan of making trackers that make the solar farms more profitable. The way that he developed that is being replicated. You're seeing that in the Tesla Gigafactory. You're seeing even Solar City, which benefits from a lot of business model and financial innovation, go downstream and look at panel manufacture.
Nancy, when I think of the venture capital industry and I think of alternative energy investments, I feel like big wins, like the two that you've talked about with Dan's companies, have been relatively few and far between compared with, say, consumer internet or software or enterprise hardware companies. What do you focus on? Why has what you've focused on worked so far, do you think? And what are you focusing on from an investing perspective going forward?
Sure. Well, I do want to...
And do you agree with my original premise?
Well, I want to honor the fact, and you have them here at the conference. I mean, you've got Tom Werner, who has brought SunPower to be.
Coming on next.
Yeah, absolutely. And you've got Lynn Jurek coming in, who's just an awesome CEO with Sunrun, having just gone public. So they're out there. In our business, not everything is going to win. And I mean, we invested in Pandora as well, but does that mean every digital music company is going to win? Of course not. So what you have to do is develop a portfolio and diversify it to protect yourself from being overloaded in areas that are of extreme risk. I think what we're seeing is that the field is getting its legs now. It's really a renaissance as more entrepreneurs come in, better management teams, better opportunities, and now, as Dan said, there's a large market. Americans heart solar. I mean, EV sales are going up. The timing is right now to push through and make new investments in things like energy storage, microgrids, international development is just starting. The ability to bring clean electricity to off-grid locations, ag, the need for applying big data to ag and for farmers to make better decisions and better livelihoods. It just goes on and on and on. And you're covering a lot of them here today. Circular economy is another good example.
And so these are some of the themes that you're interested in as an investor.
And we've already started to invest in this third fund. We've got some great bets that we're placing, and we'll be here in a few years to tell you about how they've worked out too.
Since you're in such a sunny field, I want to talk about some of the darker moments. So you mentioned the two of you that you went through Solyndra together. Now, I don't think that means you were involved.
No, thank God.
But explain why why you mention it anyway.
Well, I'll start just because it hurt my entire portfolio. You lived it through the lens of one company, but being a clean tech investor in those days was difficult. I mean, the Solyndra, the politicization really of clean tech just took the wind out of our sails. No pun intended. We were not able to break through the Washington vitriol, really, and show people that we were creating jobs, we were creating clean energy, cheap energy. That all got pushed aside really for the reasons of politics. And so to have that behind us is just, to really, I mean, the panel that led off this conference, it's like, yes, there are problems, but at least, we're creating, what are there, 55,000 solar jobs in California. That's more than the utilities combined in California. That's more than what Google, Facebook, Twitter, and one other company combined. So, I mean, we have established ourselves, and that makes, all of the political barbs a lot easier to take.
Now, this is going to be the topic of the conversation of the following panel, but are either one of you concerned about what happens when money stops being free, which it currently is, since your industry needs a lot of money, a lot of capital, and so for the last X number of years, there hasn't been a cost to it?
Well, The fundamentals of solar are, the thing I've done consistently poorly in my career is underestimated the growth of solar. It's been much faster than I ever would have imagined. And the fundamentals are so strong. Speaking as an engineer, if you look at any way to generate power, and you look at the availability of an asset, solar by far is the most reliable way. I managed a global fleet of power plants, and we had the availability, meaning when the sun's shining, there was over a 99.2% availability of the fleet. Okay, and you say, well, gee, the sun's not always shining, you can't rely on solar. That is a bunch of crap. Let me tell you why. The reason is that there are 3,000 utilities in this country, and the load, meaning the power demand on the grid, is almost perfectly correlated to the sun throughout these utilities. Now, why is that? Well, for one thing, people are up in the day, they're sleeping at night. Okay, that accounts for a 20% difference. The other 20%, 30%, well, when it's real hot, the air conditioners are on. Okay, when it's real hot, you need more water pumping for agricultural and so forth. So there's a very nice correlation between those, and we studied that in great depth, published a bunch of papers early in my career, and used a lot of that to basically perfect the net metering legislation, which has now enabled in 43 states in the country. So the fundamentals also, as they go to now investment grade folks. So I'm with a company, we're less than 2 years old. I can point to $1 billion of solar power plants that have been financed by the likes of Wells Fargo, Bank of America, Banco Santander down in Chile, and so forth. Why? Because the stuff's like super reliable. You don't have fuel price variation. You don't have.
Dan?
Yeah.
The only reason I'm cutting you off is I want to make sure if we have one question from the floor that somebody is dying to ask. And okay, right in front, please. We're going to trot a microphone up to you, I think. I don't see trotting. Here it comes. Now it is. Right here, right in front. Please tell us who you are.
Tara LeMay from Lens Ventures. I think the big question I have is that clearly we went through the great drought of clean tech already, but the timing for deals, although yours was a very fast deal, is a lot longer, and the cost of capital is a lot higher. I sit on the board of a couple of energy companies right now in a variety of ways. How do we look at that, moving from tech, those of us who are in tech going there, how do we look at the timing, how do we look at planning for that? And the ecosystem of relationships is different as well. It's very different ways of having APIs and ecosystems. So you guys can talk about that.
I'm going to ask you to give her the very short answer and then meet her for cocktails later for the long answer, please.
Okay, I mean, you just got to balance your portfolio. I mean, everyone thinks it's a long hold. Tesla actually went public in our portfolio before Pandora did, and we had been in Pandora for a long time. So it all has to do with the kind of companies you have, and you've got to think about how much technology exposure, how long a hold you want, and you can't have every company fill the same slot in your portfolio.
Dan, we didn't get a chance to ask you how long you're going to stay with the company that acquires you, so that'll be for Brainstorm E 2016. Congratulations to both of you on your success.
Can I just say one thing?
Yes.
I just want to say that it's really significant in our industry that we have a two-time successful entrepreneur. I mean, that doesn't happen that often, and so the fact that it's happened in our industry only bodes well for the future, and so I just want to honor that.
I think that's worthy of a round of applause for both of you. Thank you.